Let's take a look at some other trending tickers today. WeWork is certainly on the list. The shares plummeting 28.5% after the company issued concerns regarding its survival. WeWork says co-working clients are canceling their memberships at a faster rate than the company originally expected. Now, we know for a while here that WeWork has had a little bit of trouble in terms of its cash position, but now issuing this, going concern warning, if you will, raising more concerns about its ability to survive at all. I mean, the story of WeWork is obviously stunning. There have been a lot of documentaries made on its rise and fall. The company, remember, by the time it actually ended up coming public through a SPAC in 2021, Adam Neumann had already exited the company 2 years prior. And then the pandemic, really had caused a big issue for its business. The company's losses last quarter, $349 million. That was actually a smaller loss than a year earlier. But when you're running out of cash, you're running out of cash.
Yeah, indeed. And I mean, when we think about the physical occupancy, consolidated physical occupancy right now at 72% at the end of the second quarter of 2023. Now, they did see that was an increase from 70% at the end of the second quarter of 2022. But think more broadly about how the workforce and the workplace environment has changed so dramatically here, with the amount of people that are still perhaps leisure travelers and are just kind of floating around, or digital nomads and are continued to allowed to be so. That's less people that need to go to a WeWork, with the companies that are saying, you know what, we're going to go in the opposite direction. We're going to bring people back to the corporate environments, or we're going to move around our physical locations and make sure that our leases that we have are more advantageous for the amount of headcount that we may have right-sized in some places, or we're just looking at a different facility that we'd like to go into. That also impacts the WeWork, because that's less people that need to go into one of just the virtual settings that they can dock, work for the day, and then keep it moving. And I think a lot more of the creator community as well that would have relied on a WeWork and making those connections pre-pandemic. Many of them are realizing, all right, there are much more digital ways that they can continue to engage and drum up more of a client base here.
Right. But of course, even before the pandemic, there were a lot of questions about WeWork's business model, whether it was worth the valuation that initially was ascribed to it, because effectively it's a subleaser. That's what it was, right? That's what it is. And so, does the WeWork magic really mean that it should be worth whatever? Well, now it might not be worth much at all.